get you the update as far as India-US trade relations are concerned. Let's put the spotlight back, get you the update as far as the stock impact is concerned, the revenue, in fact, the exposure is concerned. Samit, help us out with the exact fine print when it comes to India-US relations.
Yes, US is one of the largest trading partner when it comes to India, and India exported goods worth nearly $86.5 billion in FY25 to US. Now that was nearly 2.2% of India's GDP. But do remember that the 50% tariff which is getting applicable from today is applicable or is valid on only 67% of India's total exports to the US market. This translates to around $58 billion of exports, that is nearly 1.5% of India's GDP. The remaining are the sectors which are under the Section 232, so no tariffs will be applicable on these sectors. Now theoretically, a 50% tariff could lower the GDP growth of India by around 70 to 80 basis points as per analysts. And which are the sectors that we need to focus? Firstly, if you look at the auto and the auto ancillary sector here, the ancillaries could get impacted the most. So now BLW, Ramkrishna Forging and Bharat Forge have an exposure of close to 25 to 40% of the total sales coming in from the US market. Tata Motors gets around 23% of its revenue. For Samvardhana Motherson, Balkrishna Tyres, Sansera Engineering, Apollo Tyres, this number varies anywhere between 3% to 18%. That is the total revenue that they get from the US market in FY24. Chemical stocks, UPL could get impacted the most, around 20 to 25% of the revenue comes from the US market, followed by SRF, which gets nearly 20% of its revenue from the US market. Jubilant Ingrevia gets around 9%, but apart from that, there are multiple other chemical companies that export to US. To name few, Aarti Industries, PI Industries, Atul, Navin Florin. Apart from that, Alkyl Amines and Gujarat Fluorochemical also have an exposure when it comes to the US market. Textile sector, now that also gets impacted the most. Nearly US accounted for nearly 28% of India's textile exports, and more than half of this textile exports were from India in US is for the US cotton. Now if you look at the stocks that get impacted the most, Trident has around 38% revenue exposure to the US market, followed by Wellspun Living, which has a 63% exposure. KPR Mill has a 19% exposure. Apart from that, there is Alok Industries, Himmat Singha and Arvind, which have an exposure of anywhere between 37% to 83 odd percent. Seafood exporters, that is the shrimp exporters or the shrimp feed exporters, Avanti Feeds, Apex Frozen Food, Waterbase have an exposure of anywhere between 14% to 63% of the total revenue coming in from the US market. When it comes to consumer companies, not much of players get impacted. Few of them, LT Foods get around 39% of its revenue, KRBL 10%, while Tata Consumer gets around 12% of its revenue coming in from the US market. Now if it comes to energy, no direct impact on utilities and renewable energy developers, but a negative impact that we can see when it comes to solar PV cell companies. Now Waaree Energies has an order book exposure of 57%, while Premier Energies order book exposure is less, but they have expansion or they had expansion plans in the US, so that could get impacted going forward. Now when it comes to the oil and gas, again, India used to source around 35 to 40% of its crude requirements from Russia. This has come down because of the fact that the Russian crude discount has come down to around $1.5 to $2 per barrel. But again, if India chooses not to buy Russian crude, then the cost for buying a crude from the normal market would at least go up by around $2 per barrel for Indian companies, and OMCs and Reliance Industries could get impacted because of this. And generally, if you look at every $1 per barrel rise in the in the crude prices could impact the marketing margins by around 0.5 rupees per litre, and that means for Reliance Industries their EBITDA could get impacted by around 3 odd percent, and for oil marketing companies the impact could be as much as 10 odd percent depending on whether we source crude from Russia or not. But then there are a host of sectors that get least impacted because of this Trump tariffs. First is the IT sector, FMCG, telecom, real estate. If you look at telecom, real estate, FMCG, they have most of the revenue coming in from the domestic market. Again, banks, insurance, power, steel and capital goods, 100% or nearly 95% of the revenue comes in from the domestic market.